Datavault AI Inc., trading under the ticker DVLT on the Nasdaq, is currently priced at $1.38 USD, having moved down by 0.060 points or 4.17% in the most recent trading session. If you are looking at your screen right now expecting a rebound, or perhaps wondering why a company that just announced a flash-forward crypto dividend is seeing red, you are not alone. The market expectation here was explosive upward momentum, a classic buy-the-rumor scenario driven by the buzz of Web3 integration and the flashy promise of a Dream Bowl 2026 meme coin distribution. Retail traders on platforms like Robinhood stock trading apps and SoFi Invest forums were buzzing with the idea that this dividend would act as a rocket booster, forcing short sellers to cover and driving the price vertically. But the reality is a cold, hard 4.17% drop, a slide that defies the optimistic headlines and forces us to look much deeper than the press releases. This is the classic tension between the narrative of a futuristic AI crypto hybrid and the gravitational pull of fundamental valuation mechanics. While the bulls were expecting a squeeze, the bears saw an opportunity to offload into liquidity. When we zoom in on this intraday movement, specifically this decline to $1.38, it tells a very specific story about investor psychology in the microcap AI space right now. We are seeing a sell the news event play out in real time. The volume today suggests that while new retail entrants might be buying small lots, hoping for a lottery ticket payout from the upcoming meme coin airdrop, larger holders, perhaps even institutional players utilizing execution algorithms on interactive brokers trading platforms, are using this liquidity to trim their exposure. It's a dangerous game of musical chairs. The stock did not just drift lower, it was pushed there by a consistent selling pressure that absorbed every attempt at a rally throughout the session. This price action is significant because it indicates that the market is skeptical of the long-term value of the meme coin dividend. Instead of viewing it as a tangible asset that adds value to the Datavault ecosystem, the market is currently pricing it as a gimmick, a distraction from the core financial health of the company. This disconnect between the corporate strategy of digital engagement and the market's reaction of risk-off selling is where the opportunity and the danger lies for the individual investor. Let's strip away the hype for a moment and look at what Datavault AI actually is, because the expectation is often that this is a pure-play artificial intelligence company comparable in spirit, if not in size, to an NVIDIA stock or a Palantir stock. The name Datavault AI implies a fortress of machine learning algorithms and neural networks. The reality, however, is far more complex and, frankly, more experimental. Datavault functions less like a traditional software-as-a-service company and more like a holding company aggressively pivoting into the intersection of data monetization, blockchain technology, and intellectual property licensing. They're building what they call an information data exchange, a marketplace where data is not just stored but valued and traded like a commodity. This is an ambitious vision, one that attempts to treat data with the same financial rigor that Fidelity wealth management advisors might treat a bond or an equity. But ambition does not always equal execution. Their business model relies heavily on the ADIO technology, a patented audio frequency technology, and a suite of tools designed to turn static assets into digital tradable tokens. This brings us to the elephant in the room, the financials. If you were to log into your Schwab Intelligent Portfolios dashboard or check the fundamentals on a Fidelity mobile app, the numbers for DVLT present a stark contrast to the narrative of high-growth tech. The company recently reported annual revenues in the ballpark of $2.6 million. For a publicly traded company on the Nasdaq, this is microscopic. It places them firmly in the speculative early-stage category. But what is more concerning, and what likely contributed to today's 4.17% slide, is the bottom line. Net losses have been reported in excess of $50 million. When you juxtapose $2.6 million in revenue against $50 million in losses, you are looking at a cash burn rate that is alarming. This is the reality that is currently overpowering the expectation of future AI dominance. Investors are doing the math and realizing that unless revenue scales exponentially, and soon, the company will need to raise more capital. And how do companies like this raise capital? Often through dilution, issuing more shares, which decreases the value of the shares you currently hold. This fear of dilution is a constant headwind, acting like a lead weight on the stock price every time it tries to break out. However, to dismiss Datavault solely on its current income statement would be to ignore the massive, albeit high-risk pivot they are executing. The company is betting the house on the Dream Bowl 2026 meme coin. This is not just a dividend, it's a behavioral economic experiment. By distributing these tokens to shareholders, they are attempting to gamify the stock ownership experience. They are creating a closed-loop ecosystem where owning the stock gives you access to a digital asset, which in turn is meant to have tradable value on their own exchange. It's a strategy designed to bypass traditional Wall Street valuation metrics and appeal directly to the modern crypto-native investor who uses Robinhood crypto or trades fractional shares. The expectation is that this token will develop a life of its own, creating a secondary stream of value for shareholders. But the reality we saw in today's trading session is that the broader market is confused. Is this a dividend? Is it a collectible? Is it worthless? Uncertainty is the enemy of price stability, and right now, DVLT is drowning in uncertainty. We must also address the recent insider activity, which is a critical piece of the puzzle often overlooked by casual traders scanning for hot stocks on investing sites. Reports indicate that David Mark Howitt, a director at the company, recently sold over $30,000 worth of stock. Now, insiders sell for many reasons: tax planning, buying a house, diversification, but seeing a director sell shares right before a major positive event like the token distribution sends a mixed signal. It challenges the narrative that the company is on the verge of a massive breakout. If the insiders are selling, why are you buying? This is the question you must ask yourself. It's the kind of detail that separates a gambler from a serious investor using a Fidelity brokerage account. When the people with the most information are reducing their position, it serves as a reality check against the euphoria of press releases promising game-changing blockchain integrations. Furthermore, the company's recent financing activities adds another layer of complexity. They recently completed a transaction with Silex Holding Company involving payment in Bitcoin. Yes, you heard that correctly, Bitcoin. This aligns Datavault heavily with the crypto market cycles. If Bitcoin rallies, Datavault's balance sheet looks better. If crypto crashes, they take a hit. This correlation transforms DVLT from a simple tech stock into a high-beta crypto proxy. For an investor using a conservative strategy, perhaps someone managing a Fidelity IRA or using Schwab Intelligent Portfolios, this introduces a level of volatility that might be unacceptable. You are not just taking on execution risk, you are taking on the systemic risk of the cryptocurrency market. This is why we see such violent swings in the price print. It's tethered to two of the most volatile sectors on the planet: penny stock AI and cryptocurrency. Let's pause for a moment and take the pulse of the room. I want to hear from you. Comment below how many shares of Datavault AI you currently hold, or if you are staying on the sidelines until the meme coin distribution settles down. Are you buying this dip, or do you think the $1.38 level is just a rest stop on the way to lower prices? Now, looking at the technicals on the chart, the break below $1.40 is psychologically damaging. Support levels in these micro-cap stocks are often porous, meaning they break easily because there isn't a deep wall of institutional buy orders waiting to catch the falling knife. On interactive brokers platforms, you might see a thin book, meaning there is a large gap between what buyers are offering and what sellers are asking. This liquidity gap explains why the stock can drop 4% on relatively low volume. It also means that if a catalyst were to arrive, say a sudden spike in revenue or a buyout rumor, the stock could gap up just as quickly. This is the dual-edged sword of low liquidity. The expectation of technical traders might be a bounce off the 50-day moving average, but the reality is that without a fundamental catalyst, the trend is your friend, and right now, the short-term trend is bearish. Sector-wise, Datavault AI operates in a crowded and noisy room. The AI suffix in corporate names has become ubiquitous, leading to investor fatigue. In 2023 and 2024, anything with AI in the name soared. But as we move deeper into 2025, the market is becoming discerning. Investors are demanding to see the path to profitability. They want to know how the ADO technology actually generates cash flow, not just how it works in a laboratory. They want to know if the patent licensing deals with companies like Wellgistics Health are actually resulting in wires hitting the bank account. The announcement of a $7 million deal with mining TB company to digitize minerals sounds incredible, almost sci-fi.